In this presentation, we will provide an overview of the bank reconciliation process. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Now enter this information from the bank statements here into QuickBooks and we'll now reconcile that information. Now note here that as we entered this data, we kind of marked up our sheet, our bank statement. That's why I would recommend making a copy of it, whether it be a copy that we have a hard copy or a digital copy like this. And I'm just going to make another copy, get a clean copy now that I can mark up again as we enter the bank statement. So you could have some idea of just deleting these. I can go through and delete all these marks and then start over, or we could just have another copy if you have a hard copy. Again, you might want to make a copy of it before you start to mark it up, because then you can always start over. It's easier to start over with a clean sheet of paper here. So I'm just going to make another copy of this and move forward from there. To do that, I've just opened our client folder. We've gone into the client folder, the docs 2019, the first month, January, and the client provided docs. And I'm just going to take this original doc. I'm just going to right click on it. This is the bank statement. I'm going to copy it, just copy. And I'm going to put it right underneath, right click, and paste that information. And then we'll typically rename, it's the copied one here. I'm going to right click, rename it. And this is the one I'm going to use for the bank rec. So I'll just use that for the bank rec. And then I'm going to open it with Adobe Reader again so that I can mark it up offline. So I'm going to open it up with Adobe Reader. And then we'll use this copy to mark up offline if we need to. Offline meaning we don't need an internet connection here. So it's the same form we have, and now we're just going to go through and tick and tie this out to what we have in our system. Now if we look at this, we have what we started with, 15,000 in the bank, and then we're ending with the 36,203, the difference being the additions and the withdrawals, those being the sum of this data that we have just entered and this data. So if we enter anything in exactly, we should be exactly the same on our system. We won't be. Let's go take a look and see why. So we're going to go into QuickBooks, and we're going to look at our major report. It's going to be the balance sheet that we look for here. So I'm going to go to Reports, going to go to Company and Financial. We're going to go down to the balance sheet, because this is where our checking account is. I'm going to go to Customize Reports, and we're going to change the date from 01/01/19 to 12/31/19. And OK. Here's what our checking account balance is. And we could change this. Let's do this again. Go to Customize Reports as of 01/31/19. So January 1st to January 31st. Same report because we haven't entered any data after that time period. But let's just do the first month here and say OK. So it's as of January 31st. Our balance is at $21,003. If we go to the bank statement, it's at 36,203. So there's a difference. Now, if this was normal process that we were entering the books in kind of normally as we normally would, we would expect there to be a difference due to timing differences, especially with regard to checks, meaning when we write the check, there's going to be some checks that are outstanding. And so in our system, we would have written the check. For example, if we had a check here, check 10/13, 10/12 is missing here. That probably means that the client wrote the check, but it hasn't cleared the bank yet. Now that's okay. If we were entering the checks into the system, that would be what we would call a timing difference. So it would mean that we had actually written the check, but it hasn't cleared the bank, and that would be the reconciling item. We don't have any timing differences in this system because we're just entering the data directly from the bank. We're not recording it. We're not recognizing it until it clears the bank. And therefore, we shouldn't have any differences. So when we go back and reconcile it, we're really looking at, did we enter any data input wrong here? And that's, so the reconciliation is still necessary for that reason. Now the difference here should be, we would think, this 15,000, because we didn't enter the beginning balance. We just started entering deposits here as deposits and checks. So we could assume that that's the difference. And if we go back up here and we take out the trusty calculator and we say we've got 21,003 minus what we have on here, which is minus 36,203, we get it's 15,200. So it's a little bit different. So we might be a little worried and say, I don't know what that difference is. Well, that's going to be why we do the bank reconciliation. We might have miskeyed something in the system when we entered this data. That's okay, because now we're going to figure that out by doing this ticking and tying, checking everything out from the bank statement to our records. And as we do so, we will reconcile. And that's going to be the point of it. So the reconciliation, not as powerful as it would be if we were doing the full bookkeeping service, but still necessary and something that we should do. It'll check and double check, especially just data entry errors as we enter this data. So we'll go back in here to do the bank reconciliation. We're in QuickBooks. We've got the the open windows are open. Go into the view and the open windows. And then we're going to go to the banking and we're going to go to reconcile. So we're going to go to banking and reconcile. And then we're going to change the date to the month we're working on, which is 01/31/19. That's the first month of operations. Notice the beginning balance doesn't match what we have. If I go back to our bank statement, we have 15 here. The beginning balance here is 0. Now we could go in and enter the beginning balance using QuickBooks little system to do so, but I would rather deal with that a bit different way and actually make a journal entry for that, and I'll show how that is done, and why we're going to do it, and how to check that off as we go. So we have to recognize now that we're not going to be in balance because of that beginning balance. We should be off by that 15. We're going to have to enter that beginning balance. I'm not going to do it in this format because QuickBooks will put it to a kind of a random account, like an opening balance equity account, and I'd rather put it directly where I want it to go. So we'll do it with a journal entry, and I'll show that in a second. Ending balance is going to be this 36,203. So we'll enter that in. So this is going to be 36,203, our ending balance. Now the service charge and the interest, we had a service charge, meaning if we go back up here, here's a bank service charge. But we actually entered that into the system, and that's the way I would prefer to do it because that's something that we'll see as we check off when we do the bank reconciliation. So I wouldn't use these items. These are a quick way to enter those, but doing it quickly often means that we have more trouble reconciling, seeing what happened. So I would leave those blank and we'll enter those manually. And then we're just going to continue. This is what the check register will typically look like, or the bank reconciliation format will look like. This is the book data. This is what we've entered into the system. It's broken out by checks on the left and deposits on the right. What we're going to do is just go through here and just tick and tie off all the checks and all the deposits to what we have on, going back to the bank statement. So we're just going to go back and forth from the bank statement and tick and tie everything off. It has to match because we entered all this information directly from the bank statement to our books. The bank reconciliation process should actually be a lot easier in this format than it would be if we were entering a full service kind of bookkeeping. If we were entering all the checks into the system before we reconcile it, meaning we weren't entering the checks directly from the bank, but entering the checks as we write them, then we'd have a higher level of uncertainty or a higher level of differences or difficulty, because then there would be some outstanding checks, meaning there would be items in QuickBooks here that would have checks that were written possibly at the end of the month, which would not be on the bank statement. They would be outstanding. They would not have cleared. In our case, we don't have any uncleared items because we entered all the data directly from the bank statement. So just be aware of that. As we do the bank reconciliation process, we're going to end up with a reconciliation that doesn't give us as much information because it's not comparing two different sets of books. It's comparing one set of book that we just data input into the system. Why is it still important? Because it's going to help us to check if we made any errors within that data entry process, just to double check that we have everything lined up. So it should be very easy to do this process, just to finish this up and give us that verification, give us that check that everything's input properly. Okay, so we have this item up here that says hide transactions after the statement end date. This is really useful if we were to have entered all of the transactions for like a year or a few months of transactions. If we select this item, it'll stop those after the date of the statement, meaning after January 31st. So we won't see a full year of information if we're reconciling January through December, which could be nice. It'll limit that information. So in our case, it doesn't really matter because all we've entered is 1 month of data, and we're going to reconcile month by month as we go, which is probably the way you may want to do it if you have the option to do it that way. If you have a whole year's worth of data, it's probably best to enter the data and then reconcile and then go to the next month. So highlight mark as checked. So if we select this item, we've got some different highlighting in terms of highlighting whether it be checked or not. So I'm going to undo that and go back to the standard and not have the ribbons there. We can have mark all. So if we're confident, if we hit everything correctly and we just said mark all, then we can do that. And if that were the case, and in our system here, that could be a useful system. If that were the case, we would be off by 15,000 exactly. This here giving us that difference. Now it's not off by 15,000 exactly. And so we're going to have to go in and actually tick and tie it off. We got to find what that $200 difference is. And of course we did that on purpose. No, but we're going to have to find what that is. So it's nice that we had a problem somewhere along the way so we can find out what it is. So I'm going to unmark all, and we're going to have to do this like we normally would, just tick and tie it all out. That's going to be the major information. You can change the columns and go to here. The other information down here, this is going to give us a summary of what we're ticking off as we go. The main thing you want to know down here is this difference column needs to be 0 before we're done. If it's not 0, then we could force it and then reconcile. We could reconcile and force it to put in a journal entry. But if it's not 0, we could have missed something. Even if it's off by like a couple pennies, it could be not off by one, miskey of a couple pennies. It could be off by multiple transactions that add up to a couple pennies. In other words, if this isn't 0, if we didn't reconcile fully, then it's off by $1 or so. It could be a combination of deposits and checks that we haven't entered. So the fact that it's still off only by a little bit doesn't give us the same level of assurance. It lowers the assurance a lot. And we really should be able to get it completely exact because we've entered the information directly from here into the system. So it should be exact as we enter it into the system going from here to that system. Now that being said, after I've just said that, note that we did round this as we made this. So this is rounded. We don't have pennies here, and there are a couple that have pennies in it. So in our case, because we're not adding pennies, we could be off by rounding errors just due to the fact that we're not including those in our system here. But just be aware that if you're off by even a small amount, you really want to find that exactly, because it could be not just one small amount, $1. It could be multiple things that add up to $1. And of course, so next time what we're going to do here is we're just going to go through these and just tick and tie it. So we find this amount here. We're going to go back to our bank statement and tick and tie it out and just check it off as we find them. Once we do that, this at the end of the day will be 0 at the end of the day. If we have to make any changes, we'll go ahead and make those changes. If we have to add anything, we'll go ahead and add those changes. If there's anything that's going to be on the bank statement here that's not on our books, then we need to add it because that's how we're doing the system. If there's anything on our books that's not on the bank statement, then in a normal system, that would be normal. We would expect that because there would be outstanding checks. But in this system, that shouldn't happen either because everything that we entered into the system is from the bank. So if there's anything in our books that's not on the bank, then we got to think, well, how did that get there? Because we've entered everything directly from the bank statement. So it's probably the case that there's some misentry on that system as well. Everything under the way we are doing this system should tie out exactly. And that's what we'll see next time. For more accounting information and accounting courses, visit our website at accountinginstruction.info.